An update here on what's going on with government support during the coronavirus crisis in the UK, and also what's going on with banking and funding some of this government support. Because we have to remember, while the government is making the announcements and underwriting some of these schemes, it's actually the big banks and major lenders who are putting it out into the marketplace at the moment. So first thing, we're about a week into business bounce back loans being available, and the uptake on these has been very large overall. 69,000 business bounce back loans applied for and funded up until the 7th of May so far. So within just a couple of days, a big uptake of these loans, over £2 billion worth of lending reported so far. Now, to give you an idea, that's significantly more than what have been funded through the coronavirus business interruption loan schemes. And ultimately, that probably comes down to a lot of industry criticism of the CBILS scheme was that it wasn't really fit for purpose. They were very difficult to qualify for, and these bounce back loans seem a much better fit to give businesses much needed funds and liquidity to be able to trade out of the coronavirus crisis. And these are linked very much to some government plans hopefully released in the next week about how we're slowly going to edge our way out of lockdown in the UK. If you haven't looked at business bounce back loans yet for your business, if you've got any property service related businesses, even direct property businesses, have a look at the criteria around these, because they are relatively easy and straightforward to apply for. Funding of these is fairly quick overall. They're appropriate to a lot of different businesses in the UK, and it's very useful liquid capital to get you back to normal trading and starting to get on with normal business activities as well. Apart from that, we've got reports this week that generally in the UK economy, spending is down significantly. Now, a lot of this is down to a lot of retail outlets not being open at the moment. People have shifted to a lot more online shopping, but spending overall is down. A lot of people tightening their belts at this stage, maybe focusing just on the necessities. Now, there's two ways of reading this. Possibly people are hanging on to some funds to go on a bit of a spending spree as economic confidence returns a little bit as we ease our way out of lockdown, or maybe, and I think this is a more likely side of things, consumers generally feeling the pinch a little bit and the nervousness of maybe being on furlough and at a reduced level of salary, maybe being on reduced working hours at this stage, potentially even facing redundancy, and they're stockpiling money a little bit more. What that actually shows overall is a slight reduction in the use of credit overall, definitely a reduction in activity, and we're seeing a little bit more saving generally in household budgets in the UK, which is not necessarily a bad thing. But we do need to remember that it's consumption overall that generally drives the UK economy. So the government will be looking at measures to try and get consumer confidence back up there, a little bit of spending stimulated, because they need the economy moving again sooner rather than later, although they are balancing that with making sure that people stay healthy and that they don't reduce restrictions too quickly and risk another peak of the coronavirus crisis in the UK. The final thing to kind of update on government loans and schemes for this week is around their furlough scheme. Now, this is poor news for those people who are directors of their own company and might operate on the basis of running a once yearly payroll. A lot of people were caught out in regards to this because the initial reading of the legislation around the furlough scheme seemed to indicate that directors of companies like this would be eligible for the furlough scheme. However, subsequent updates to this, and there have been 6 changes to the legislation since this legislation was put in place, and it's a very new piece of legislation overall. You can only furlough employees who are on payroll before the 19th of March. Now, that's a very difficult position for a lot of people who are directors of their own company who may be in a position where it makes sense to furlough because there's not a lot of company activity and should really be eligible for some of this government support, however haven't been able to access it because of this rule. Unfortunately, HMRC has taken a strict interpretation of this. A number of appeals around this have been rejected. The government has tightened up the legislation to put this criteria in place. Really, the only thing to do if you are a director of your own company and you've fallen foul of the ability to not claim under the furlough scheme because of when your payroll is run is write to your MP. It's really political pressure is the only only thing we can do now to rectify this situation. The other thing to consider, though, is at the moment, if it's just liquidity you need in your business because you are in a position where you may be able to start trading again fairly quickly as soon as lockdown eases, then maybe a business bounce back loan would be more appropriate, and it's worth jumping on that sooner rather than later to get a hold of that. Now, if you are looking at all of the support measures that have been put in place from the government, all of the options in the marketplace, you're a little bit confused which way to turn or how to use some of these things, remember that we're here to help and support you with coaching, with guidance. We can guide you in the right direction to make sure that you're taking advantage of those things that are available to you and you're using them to drive your business forward. Have a look in the post section here for the link to get in touch with us and find out more about what we have to offer.